Hey everybody, it's Justin Fitzpatrick here, and I'm with our Fitzpatrick Real Estate Team Preferred Loan Officer, John Jenkins, Johnny Mortgage himself, who handles about 90% of all of our clients. Wouldn't you say, John?
Yeah, I think 90% is a good number. I like that. I appreciate the partnership that we have together.
Yeah. So this is officially, I guess, episode one, if you want to call it that, of our Zoom podcast that we're going to be shooting, just kind of keeping people up to date on not what's just going on in the national real estate market, but specifically the Dallas real estate market, because it's most certainly an outlier with the amount of inventory we have versus the interest rates. And speaking of the interest rates, that's going to be the topic of our actual first episode. So, John, obviously, the consumers were really hoping that the interest rates were going to be sliding down around Christmas time of this past year. And man, that just never came to fruition, right? And now here we sit. We're still sitting at about the same, the upper sixes, right? So we were hoping that you could maybe share some insight as to what happened. Why did the rates never come down?
Well, we were expecting the same thing that you guys were expecting, and especially right before spring market, right? But the interest rates did not cooperate with us, as we had a president-elect election that we were uncertain, right? We didn't know what was going to happen. We knew the first 90 days he was going to be doing a lot of changes. But more importantly, for interest rate purposes, watch inflation. And when inflation is low, interest rates are typically low. And so Jerome Powell is in charge of the Fed, and he's the one that gets to say when, he cuts the Fed rate. And when the Feds cut rates, then every, our rates, it's not a direct correlation, but our rates will then go down as well. He hasn't done that this year. He's still a little bit on the fence when it comes to cutting rates. He doesn't want to cut them too early, but there's a little, he doesn't want to cut them too late either. But we do feel like he's still going to cut them probably 50 basis points by the end of the year. Two cuts at 25 basis points each is still what they're predicting. We think the first one, again, we think that it will probably be September. So then maybe September and then maybe November or December for the other cut. But he wants to make sure that inflation is under control and he gets as close to that 2% inflation rate that he wanted. And right now, with all the things going on with tariffs, wars, and things like that, it affects the economy. And so he's a little bit scared if he does it too soon that inflation might tick back up and then throw us in a recession, and then you know we're not going to see lower interest rates. So that's a little bit of why, at a high level, that the interest rates have not been lowered. Like you said, though, we are right now probably in the upper sixes. There was a point where we were in the upper sevens. So right now, it's about the average is 6.8, 6.7. We anticipate them to be in the lower sixes by the end of the year, but that is just, what our market analysis people are telling us. So that's a little bit of what's going on in our market and the interest rates and how we feel that they're going to go.
Okay, yeah. And so that Fed cut, that is not that direct correlation, right? So when they cut the rate, we still have to kind of monitor that and see what's going to happen with the mortgage rates. But it sounds so far like everything has been trending in the right direction. And I think what a lot of people really don't understand is that when we hit that upper two, lower three interest rate mortgage rates, that was abnormal too.
Yeah, that was very abnormal in 2020, 2021. That was just kind of a blip. I've been doing this 20 years, over 20 years, and interest rates have never been that low. And I hate to see buyers waiting, they're waiting and like, I'm gonna wait until, they get back in the 3% range and then I'll purchase. Where that's probably never gonna happen again. I can't say it won't ever happen again, but history says it probably won't ever happen again. And we're more the normal now. We're probably, you want interest rates probably to be in the upper fives to upper sixes. I mean, that's pretty the normal
Pretty
interest rate over time. So that's kind of what we're educating buyers about. And then also we are offering special programs to kind of help them, with the interest rate, where they can get the mindset right that I still want to buy this home. What's my interest rate, and not make a judgment off just interest rate and then purchase home, because homes always are appreciating year over year. I think in the last 50 years, we've only depreciated, I think, five.
Yeah.
And I can get some charts if we ever want to talk about that again. But yeah, that's kind of what's going on in my market.
Well, I think that's the hard part, right? Is that we are sitting here at maybe just a scotch higher than our long-term average since the 80s of 6% mortgage rates. And I think people have a hard time wrapping their mind around it. I just cannot afford this home. So if this is the normal, when will I ever afford a home, right? And I know as a real estate agent and seeing what our market is doing, supply and demand, we are still low on supply. So when that demand kicks in, prices will go up. So we tell our clients, hey, if you can go ahead and secure the asset now and refinance in the future, then you're winning on both sides of the pendulum there. And I know that we've worked a number of deals together. Can you tell everybody just some of the programs that your company has to help make the homes a little bit more affordable?
Yeah, so right now we're offering my branch, my Fairway branch, we're offering a what's called a 1-0 buy down. So that basically if the interest rate today was 6.875%, then the 1-0 buy down that I would pay for as a branch would get you to 5.875% for first 12 months. And then at that point, we anticipate rates being lower, and then my branch or one of my LOs will refinance the loan with no lender fees. And so we're offering that to all our clients, all your clients, and that helps a little bit, like get the right mindset. Let's buy an asset. Let's let that asset appreciate, and then we can always just fix the interest rate when they get lower down the road.
Yeah. I mean, when you talk about that extra percent down, I mean, pending the price of the home, you're probably talking anywhere from 150 to $600, right?
Yeah, depending on the price of the home for sure.
Yeah, so I mean, it's a really big deal. Well, I really appreciate you jumping on today. I know we've got this plan to either go bi-weekly starting out. If it picks up some momentum, maybe we do even a weekly call. But great information today. Again, I appreciate you stepping on. Is there anything that you'd like to tell everybody before we jump off here?
Buy a home as soon as you can, because we do not want to be in a multiple offer situation again like 2020 and 2021, and then let your house appreciate in the future.
You might as well just take the higher interest rate if you're going to wait for that to happen, right?
Absolutely.
All right, John. Well, thanks for jumping on. Thanks everybody for tuning in, and we will catch you guys in a couple of weeks.